Okay, wow. I can't see everyone in the back, but hi, everybody, and happy Thanksgiving to any other Americans in the audience. Very thankful to be here with you all today, and I feel really thankful to be an impact investor at a time where the world doesn't seem to be making any sense the further we go along. My own background, I don't think I have it in the slides, so I'll just do it really quickly. I moved to Holland about 8 years ago to work with Anthos Fund and Asset Management, and we'll talk about the firm in a second. But I've been in the impact investing space since 2005 when I graduated from business school. And I've worked for a lot of different types of platforms. The Omidyar Network, Pierre Omidyar started eBay. I worked with Unilever, Corporate Ventures. They wanted to do fund investing in emerging Asia. I started my own impact fund with a lot of hubris in 2013. That lasted about 6 months, and luckily Google bought out some of the portfolio of assets before I said, wow, where can I find permanent, flexible, patient capital? I never dreamt of living in this country, but I'm so happy that my search led me here. And that patient, flexible capital, that long-termism, exists within the platform that I work for, and that's Anthos Fund and Asset Management. So Anthos Fund and Asset Management, we've been around for nearly a century. We were a single family office up until a couple of years ago. So now we like to say we're an asset management firm rooted in the DNA of a single family office, and that family is the Brennick-Meyer family of C&A fame or C&A fame. So the family has been investing with their values for the better part of a century. The company has existed, as most of you know, for the better part of 2 centuries. But the idea of being a business as a force for good is something that was inculcated into the business, the family values, and all of the entities that developed over the last century. Suffice it to say, the family really believes in 3 strong pillars, and it's really around sustainability. So how do you improve the world, the environment? I think there are quite a few family members who like to say, we don't inherit the world from our parents, we're actually borrowing it from our children. And when you think about it that way, it really is a paradigm shift. So it makes you want to actually be a lot more responsible about how you spend your time and your assets. And last but not least, human dignity is one of the prongs and pillars of the family as well. This is about giving every basic citizen, a human being, the right to lead a dignified life. And I'll talk a little bit about how we approach that. And also good corporate citizenship, because there's still a group of entrepreneurs. If you are a company, what can you do as a company to make the world a better place and shift the ecosystem and build a more resilient economy? So with a lot of humility, I think I wanted to start with talking about our journey. The family started doing impact investing formally, the family group of entrepreneurs and the family office clients, in 2012. And we service quite a few of the family office clients from the Brennick-Meyer family, and many of them had been doing it on an individual basis, but in 2012, it was decided that we would do it as an institution, as a cohesive unit, as a cohesive family out of the family office. So that's when we started. We were very opportunistic. We were given a lot of autonomy as portfolio managers and managing directors. There's 50 of us within Anthos Fund and Asset Management. And the family said, just try different things. Be catalytic, be additional, try and see what works. And we did. We did debt, private equity. We did direct investments, fund investments. We did emerging markets. We did developed world. And there was a lot of learning from being opportunistic. So in 2008, once we had some pattern recognition as to what themes were working, where were we over-indexed, what geographies were able to return capital, which GPs stood the course over the course of the last 3 or 4 years in their investment period, we made some adjustments. And that's what you'll see on this slide here. So first, I think as part of the strategic shift in 2018, we said, why are we limiting ourselves to only private assets? Why not look at the public markets? And this is something I think some other speakers will get to in a second, but we're an investor in 2 of the sponsors of today's events, coincidentally, Bailey Gifford and Federated Hermes. They both have impact equity products that we've helped to fund. So the reason to really go into other asset classes was multifold. One, if you think about a financial portfolio and you have risk-return diversification, why not think about your impact portfolio and the risk-return diversification? And as you know, the way you engage as a public markets investor is very different as a private markets investor, and there's different leverage points associated with that. And certainly scale takes on a different meaning when you think about private assets, as Laura talked about, versus the public assets. How do you shift more of the assets? And most of the world still sits in the public sphere's domain. If you think then as a portfolio manager about how you build your portfolio and how you deploy your capital, if you do private assets, you're really subject to the timelines and the fundraising cycles of these closed and blind pool funds. But if you have the ability to invest capital more quickly, you reduce cash drag, and you also look at the different duration that exists in your portfolio in terms of when certain investments are going to mature. And of course, in today's world, where you need liquidity. So from a portfolio construction perspective, it's helpful. And then I talked about the impact, of course. If you get the biggest companies in the world that trade on the New York Stock Exchange, the London Stock Exchange, here in Amsterdam, mid-cap, large-cap companies, if you can get them to shift their behavior a little bit, wouldn't that scale also have big ripple effects in the market? So these are some of the adjustments that we made. We also published our impact framework in 2015. You'll see a little thumbnail sketch of it here called More Than Measurement. And this is where we got outside of our own heads and said, what is our who, what, how much impact risk and investor contribution? And if those subtopics sound familiar, it's because they would go on to really be the IMP. And we were one of the foundational building blocks for what would become the Impact Management Project. And the two caselets that we talked about here are actually two of the case studies I'm going to talk a little bit more about later in the presentation. We also decided that we were much more passive in the beginning, and that's partly a question of we were learning. So we took smaller stakes in funds. We didn't get on the governance circles. And I think over time we realized that to be strategic, to amplify our own voice, we wanted to be on the LPACs. We wanted to help them create impact advisory councils, and we wanted to have a bigger voice at the table. So that's also a really strategic shift in terms of the value add that Anthos brings as a platform. I think the idea also to go into a multi-asset portfolio, it really makes a difference in a world like this and in a year like this, which is extremely volatile, where as an investor, you can be really paralyzed about how and where you should even start. And the idea was to really create an all-weather portfolio using a multi-asset model so that when public markets are down, like they are this year, your private assets portfolio are really holding in place. And in a year like 2020, when public markets were doing really well, our ESG, our impact positions actually outperformed. So it's the ability to really take advantage of these market movements and have the non-correlation between the asset classes we thought was also very unique, and we wanted to create that resiliency, certainly for our family clients, but also for external clients. I mentioned the value add. We do it through our governance and active management in the funds we invest in, but I have to say we do it through speaking at events like this. We had our own impact investor event ahead of the GIN conference earlier in October, and I think just sharing the lessons learned, having your portfolio companies talk to each other, and also producing case studies. Everything we produce is really for the public sphere, which is a big deal given where we came from, which was a very closed environment. So I think sharing your intellectual capital, sharing your time, of course, your human capital, as well as your financial capital is a great way to add value, and we do that through the Branick-Meyer platform. This gets a little bit more concrete. I think everybody has a different compass, true north, if you will, and I mentioned for us, it's really the family values, which you'll see on the left there, sustainability, human dignity, and good corporate citizenship. So as an investor, we were like, okay, great, how do we take these values and translate them into a real, concrete, investable thesis? And luckily, one of my colleagues was able to find this really cool infographic that you'll see from the Stockholm Resilience Center, which is, think of it as a layer cake. And we were able to really map the three values on the left to this layer cake on the right and translate how you would take something like sustainability and what are the SDGs that map to that particular value. and what does it mean to invest in the environment, life on land, life on water, et cetera, how you think about the biosphere. Human dignity, we sort of translated that into looking at basic services for people, affordable housing, education, financial inclusion, access to information, having peace in civil society, just really basic needs that one would need for human dignity. And we mapped sort of 8 SDGs that map to what we call society. And last but not least, as I mentioned, we still work for a group of entrepreneurs that are operators. So when the company is the change agent, how can you have good corporate citizenship? And what can you do as a firm, as an institution? And this is about everything from fair trade, green supply chains, fair working conditions, and we've mapped the SDGs that sort of translate into that particular value. So no, we don't choose, we don't focus. And I think because we chose to have a multi-asset model, that we wanted to give every asset class, every tool in our toolkit, the ability to be able to, in fact, invest across all these SDGs. The challenge is if you pick a few, you're really limited to then how you would do real estate through a gender lens, for example. It would really, really limit your universe. So we wanted to really be as ambidextrous as possible as investors in a space that's already quite challenging. Most of you should know what this is. I'm guessing I'm talking to a room full of people who are quite experienced. But this is the what, who, how much, impact, risk, and contribution I talked about. And here's how we define it here. So really, what problem are you trying to solve? What's your theory of change, we like to say. Everything that sits within my portfolio at Anthos is SFDR Article 9, for whatever that means today. But it means it's especially intentional. It's that category C, contributing to solutions. So I need to know what problem you're really trying to solve. Who is your target market? Are you serving bottom of the pyramid populations, the general public, emerging markets, only people who are lacking education? So getting a sense of the target market and the total addressable market is very, very important. How much? So this is where scale really matters. Are you going for depth or are you going for breadth? And what that means, again, in public markets is very different than private markets. So we really try and get a sense around scale so we can really try and make a judgment on what's the biggest impact per euro. Contribution, and notice we say contribution, not attribution. We want to be able to see what each fund manager is really bringing to the table in the companies that they finance, and in turn, what that company is producing or servicing for its underlying beneficiaries. Attribution, as hopefully some of you would agree, is really hard to measure because there's syndicates of investors in nearly every investment, so your direct causality based on the amount of money you've invested is extremely challenging. So for now, we really think about investor contribution. And last but certainly not least, risk. Impact risk. What are the unintended consequences of what you're trying to do? So there's always the known unknowns, and then there's always the unknown unknowns. And because you're funding this particular company that produces this product or service, what are the things that can go wrong in terms of externalities? And in a year like this year, there are many things that can go wrong. A lot of blind spots that everybody has, and a lot of interdependencies that you wouldn't anticipate in your own portfolio, but they tend to manifest. So we want to invest in fund managers that are proactively thinking about the systemic, the impact risks, and more importantly, how to mitigate some of these risks to the best of their ability. So now we get to the fun stuff, the case studies. Paula asked me to really think about, in this, again, extremely volatile world, times of uncertainty, what are the themes and the bets we decided to double down on in this environment, because we thought it would help fund a more resilient economy and make impact on a bigger scale. This is one of the 2 caselets in that more than measurement piece. We doubled down on one of our investments in a firm called Learn Capital. It's a global ed tech firm. They do early and growth stage investing all over the world. They're headquartered in North America, but they have investments in Africa, Asia, Latin America, and in Europe, both West and Eastern Europe. And essentially, this fund started in 2015. It was open to third-party investors in 2015. Funds 1 and 2 were captive funds to Pearson, the education publisher in the UK. We helped seed Fund 3. The GPs are somebody I had known since 2007. So imagine tracking a GP for almost 8 years before you invest in them. That's the kind of thoroughness I take a lot of pride in doing, but at Anthos, we really want to be very deliberate about the investments that we make and the due diligence that we do. So it's a firm and a partnership we've been tracking for a long time. Fund 3 was out, and IFC was going to also anchor it. And so the discipline for emerging markets was really being brought in and really measuring the impact of what they do. So ed tech is very broad, but as you can imagine, during COVID, we all started to learn how to learn in a hybrid model, work in a hybrid model. And so this investment took off, not surprisingly. So we invested in 2015 in Fund 1. We invested in 2014 at the end of 2020, and we just re-upped in Fund 5 in a bigger ticket than we've ever written before. So it's a B2B, it's B2C, it's peer-to-peer learning, it's parent to teacher, it's teacher to student, and it's also virtual university. So how do you reduce the educational cost for students who don't have the ability to go to physical universities? So a lot of different models in this portfolio, and several different unicorns as well. So the financial returns, which I won't focus on too much, have been extremely good. In Fund 4, we're already up over 100% in terms of IRR, and the MOIC is 4.5 or 5x, which is quite substantial. Fund 5 just started, it closed in May, so we're holding all the investments at cost right now. But I was a former ed tech entrepreneur in the late 90s, so for me, education is one of these SDGs that levels the playing field and really closes the digital divide, the job divide, and it's been one of our more powerful investments. We actually wrote an engagement case study about how we worked with Learn Capital to improve their own impact dashboard. So they had never heard of the IMP, that who, what, when, where, and how in 2015. That was the first time they had thought about thinking it in that way. And over the last now 7 years, we've really helped them map now to what will be SFDR 9 qualifications. We help them look at both quantitatively and qualitatively the KPIs that they're tracking and how that information is reported to us as investors and how they create those impact metrics and synergies in their own portfolios to share. So by far one of our best performing investments financially, but I would also argue socially. This is one of the, again, the SDGs that not only was resilient, but actually flourished in the time of COVID, and it's now the new normal, as I'm sure you guys can all attest to. The second case study is around fintech, and I'm getting a thumbs up from Virla, so I know she knows this investment as well. Quona is a fund that we also anchored in 2015 in Fund 1, and the GP, one of the GPs there is named Monica Brand. I've also known Monica since 2007. So I guess the benefit of having done this for so long is that I know a lot of people and we've all grown up in the industry together. But it's also so that I can really look at the integrity of the GPs, the authenticity. So when they launch new impact funds, they may technically be an emerging manager, but they're managers that I've been tracking for quite some time. So financial inclusion is something that I think most of us take for granted. I think everybody probably uses their Apple Wallet. I mean, in the Netherlands, we don't really use cash, as you know. We use our PIN cards for everything. That's if you take out the physical PIN card, otherwise you use your wallet. And you won't be surprised, but it's very similar in emerging markets, which is where Quona invests. They invest in Latin America, Africa, Asia. This is a pure play emerging markets investor, and they have local teams as well. And this is a point of sales, technologies for small, medium businesses who need to be able to lower their transaction costs. It's about the woman outside of Nairobi who's selling mangoes on the road, who doesn't have teeth, but she has a mobile payment app on her smartphone, and she'll take your payment that way instead of taking Kenyan shillings. And when you bring people into the fold, it really empowers them in quite an amazing way. So the impact metrics related to Quona have also been really, really good. They're one of our best performing portfolios financially. We're in Fund 3, and we're in 2 separate vehicles of Fund 3. But they've been able to really service both individual micro-entrepreneurs, but small and medium enterprises. And one of those enterprises, and actually the beneficiary of one of those enterprises, is a video that I wanted to play for you guys here. Can I just hit play? Or, let's see, I'm just going to...
Lo que hacemos en Rayito de Luna es que hacemos economía circular y regenerativa a través de la elaboración de productos de higiene y cuidado personal.
Surgió cuando Jimena y yo decidimos cambiar todo nuestro estilo de vida. Vendimos el carro, empezamos a usar bicicleta, transporte público, a caminar mucho más.
Teníamos un cliente que en ese momento era una muy buena oportunidad, pero pues no teníamos como el capital para invertir en stock, entonces recurrimos a Confío, equipamos el laboratorio, el cliente vino, vio como todos nuestros procesos y afortunadamente pudimos cerrar con ellos. Ahorita estamos desarrollando una línea que se llama Simple y Local y ha servido justamente para el desarrollo de esa línea.
Los beneficios de tener todas las soluciones integradas de pago es que precisamente...
Sorry guys, I had to cut it short because I want to be respectful of people's time.
I just wanted to, you wanted to have some questions as well from
Oh.
the audience.
Sure,
If you want to
happy to take questions. The
Yeah.
video is in the slides, which I'm sure can be shared.
Yeah, we can share those with you later. But if you have, we have time for one or two questions, and then we'll move on. I think we have to eat a bit into the break, which is fine.
okay.
It is fine. Any questions?
Yeah.
Yeah.
A question also for the previous speaker, also for you. Is it thinkable that we wait so long with investments, upscaling investments, that the world is flooding all over the place and we say, oh yes, but we have billions on our bank account?
I mean, that's a hard question for me to answer. I will say, though, that I mentioned my opening comment, which is I'm really thankful to do what I do because I sleep very well at night, trying to think I'm doing what I can to make a difference. But I mean, when I think about the commitments or lack thereof at places like COP 26, 27, the lack of real capital flows, which Laura mentioned, the potential that we have and what's actually happening, that 1% number, I would not be surprised if it's 1% of the Dutch market, 1% of the world market, 1% of most typical asset management firms. I mean, yes, we're not doing things fast enough. But that's why if we're borrowing from our children, we need to be doing more at a higher velocity.
I think Laurie has a quick
Laura,
question.
Yeah, no, just a quick answer, actually.
Okay.
Because you mentioned it was for both speakers. I don't sleep very well at night. And that's actually the reason why we created the NAB with a few other institutional and impact investors, because we think we're absolutely nowhere near we should be. I think Al Gore was mentioning you're complaining about a few million migrants. Wait until we have 1 billion coming with climate change. And that's not going to be in 100 years. That's going to be in a few years. Our children will be witness of that. We're on a highway to climate hell, and we have the gas pedal still full in. So I think that incremental change, what we're all doing now, it's incremental change. That's fine, but that's not going to cut it. And I think we need radical change. And that's why changing legislation, putting a lot more pressure to financial institutions, to governments, to really change the rules of the game, that's very important.
Thank you very much. Thank you so much. Thank you.